So Ginger started with one question. I'm going to start with two. Are there any small, medium business owners in this room today? Please raise your hands. Yeah, so we have some real litmus tests in the room today. The second question I have is, this year, how many of you have felt a tinge of frustration standing in the queue at a bank branch or dealing with customer care support on the phone? Please, show of hands. Now, I just want you to imagine, what if that standing in the queue and dealing with the phone had to do with your survival or getting your next paycheck, and you weren't able to do that without going through that? That's the life of a small and medium business who's traditionally dealt with banks, traditional banks. And which is why we have this amazing panel today to discuss exactly how the world is moving in that direction in terms of making lives better and how credit and money flows are going to change. So let me start with you, Mary Kay. We had some fantastic conversations. When you look at SMBs today, what is the biggest gap that you see between what business owners need and what they're getting right now on financial services?
Yeah, it's a great question, and I wish we all serve small businesses up here, and I wish we could say the gap is closing, but sometimes I think with everything that's happening in the world, the gap is actually increasing. There's so much that they have to worry about. I think I'm going to pick two. I'm going to cheat a little and pick two. I think access to capital is definitely one of the things that I know Ginger mentioned, and it's not just capital; it's the right capital. It's at the right time, the right amount, when they need it for the right purpose, and it's just not quite custom to them yet. And then I think the other thing is we all worry about fraud and losing money, and I think they really need support in being and having trust in the transactions with their customers and with their trading partners, their vendors, their suppliers. And I think cyber makes that much worse.
Yeah.
It makes the tools better, but it also makes the fraudsters better.
Absolutely. I think you hit the nail on the head. We will definitely delve into access to capital. But David, let me bring this to you. What do you think is the biggest constraint to scaling capital availability? Is it operational complexity? Is it awareness? Like, what is the challenge? What's the biggest challenge?
Yeah, when we talk to our customers, I'm from QuickBooks and Intuit, and we have, of course, millions of small business customers. And the thing I hear time and time again, I'd actually distill down to confidence, and that is really the confidence of, can I get the access to capital that I need? And for them, it's hard because they, in many cases, don't have the confidence. They don't necessarily know what drives their ability to get capital. And I think traditionally the system has made it very hard to understand and then to go access that capital. They fill out a lot of paperwork. They've got to go do a lot. This is not traditionally a cohort that folks have wanted to serve really well. And so it's that confidence of, look, I can see that I might have some liquidity issues, but I don't really know that capital's there for me. And so I think for us, we spend a lot of time thinking about how do we make very clear upfront what your borrowing power is at any given period of time to remove confidence as an impediment to go even take the first step to go try to access that capital.
Absolutely, right? And if you think about it, there are no credit scores. Like, as a consumer, we know what my credit score is. I know what is out there, but SMBs don't have that luxury. But Radinder, let me come back to ask you the same question. Like, what do you think from your conversations with your customers, what is the biggest impediment to scaling for SMBs?
Yeah, I'd say number one is, again, the access to capital always comes up. And part of that is that's also my role, and they know that's my role at the company. And so folks bring that up. But I think that's a fundamental challenge. And I think there's also a lack of awareness around what is available to them. And we collectively need to do a better job sort of telling that story and making sure it's front and center in the experience itself. And the other thing that small businesses talk a lot about is they need a partner who can scale with them, right? So someone who might be there with a $25,000 working capital loan today, but 10 years from now will be able to do a $500,000 loan, right? And so I think that scaling piece is critical.
Absolutely. So just addressing the small, medium business segment particularly, right? The self-employed segment and the small business segment comprises about 50% plus of revenue for Intuit. It's the highest margin, most durable growth engine that the company has. You see the full accounting and tax picture across these customers, right? What is the most crucial insight that SMBs miss, just from their own cash flow until it's too late?
Yeah, I think what they really miss is, and this is largely a function of the tools that they've had access to, they have a picture of yesterday. They don't have a picture of the future. So they know it's in their bank account, now. They know what left the bank yesterday. They know what invoice maybe was paid yesterday, but they don't know what's coming in. They don't know what bills are going to be due. They don't know what invoices are going to come in. And so, again, we spend a lot of time trying to help educate not just the picture as it is today or was in the past, but what's about to happen to your business. And with that information, then they can go do things with that. They can make decisions. They can get access to capital if they need it. They can do things to accelerate, sort of their AR. They can delay AP. There's action they can take before it's too late and they get into a cash flow crunch like the one that you described.
Think about, right? It's really interesting. Like when I think about my financial position, all I need to do is go look at my bank account and look at my credit card account, and that gives me a good sense. But when it comes to small businesses, there are like 15 incoming and outgoing payments that you can't see on a timeline. Just think about the complexity that kind of comes through along with and then money moves real time. Like we don't wait for months or weeks to kind of, get a sense of the way financial situation kind of evolves, right? Mary, Bill sits at the center of AP/AR view for SMBs. Where are they losing the most time right now, or the most time or the most money in workflows? Like, where do you think is the biggest delta?
Well, it's a great question, and it depends on every SMB too. I think one of the things that when we get into these rooms and we talk about SMBs, and I'm glad to see some SMBs actually here, we talk about them like a group.
Yeah.
But there are some SMBs that we have as customers that are in manufacturing, others who are in services, professional services, lawyers, some accountants actually are working with us. And so their cash flow needs from AP to AR are very different. So it really depends. We've tried to listen and personalize to the needs of our actual customers and to be that support for them, looking at what is coming in and what is going out. And they have so many levers, almost in some cases, you talked about too much choice or not awareness. They can extend their terms to get a bit more cash flow. And I've always said, I've worked around this business for a long time. The joke is that cash is king, but I always said cash flow is king, because you can have cash at the wrong time and it's not helping the small business's business. So being able to know when to trip which switch in their AP and AR systems, and that's the intelligence that we try to bring to them every day when they're using our systems, because they sometimes aren't going to know.
So I will let everyone take this back. Cash is not king, cash flow is king. So I think that's a good tagline to kind of take to as a marketing or whatever for SMBs to understand, right? Ratinder, what is the most misunderstood factor about SMB creditworthiness in an environment, what David pointed out, where money is moving real time? Like, where do you think is the gap there?
I honestly think that from a credit risk standpoint, the biggest thing is experience, right? And friction. So you have to make the credit really accessible, like the application accessible, the product accessible, the offer accessible. If you make it hard to find, who's going to end up applying, right? The one who's trying really hard to look seeking credit, basically. And then if you've got a clunky experience or you're introducing a lot of friction, right, your best credit is going to walk away, right, and go somewhere else. And so I think that's the biggest misunderstanding. Like if you can drive a better experience, you will drive better credit quality at that top of funnel and conversion. And I'd say that's the number. Like we have all the models in the world, strategies in the world, data, but if your experience stinks, like you're done.
I'll take a point of that and elaborate it. So I've covered banks for bulk of my career out of Asia. And there are some companies who've made a living, like top-notch return drivers is the SMB business. But if you talk to bulk of the banks, that is the one business they really struggle to get right. And you can identify, like if you pick a country, you can tell, okay, UOB in Singapore, Kasikorn Bank in Thailand. And the gist of it is exactly what you both summarized right now. One is SMB is not one unit. They come in like a varied shape and size, look and feel, like sectors different, size different, requirements are different. But also to what you pointed out, right, Ratinder, that their needs are very complex. And the other thing is on the failure rate and all the impact of creditworthiness awareness between financials, how they assess that. That's the biggest gap that banks really struggle to kind of put a number to or like service them as such, right? And that's the DNA of banks. So how do we get to address that gap now? So David, Intuit is using a lot of proprietary data that you have on these companies to automate a lot of their financial workflows. Tell us more about how you're using predictive models to kind of make them aware of what their needs are before they actually can see it.
Yeah, so as I alluded to earlier, again, a big part of our focus is on predicting what's about to happen, not what has happened. And so one of the places that we focus a lot of our attention is on kind of outstanding AR. So invoices that are out there in the world and trying to help our customers predict, hey, when are you likely to get paid? And we can do that, of course, because if I send an invoice to you, we've probably seen a bunch of other people send invoices to you. And so we can predict what your payment patterns look like. And so we would feed data like that back to the customer and say, hey, look, this is our prediction. But again, the prediction is not enough. We want to make sure it's clear, okay, what do I go do with this thing? And so then we want to be thoughtful about, is the point that, hey, this is going to take a while and we perceive that you're going to have some sort of acute gap. And so you should go access capital. And by the way, not just go access capital, but here's very specifically what we think you could go do to get capital now. Or are there other kinds of things that you could do in order to avoid a cash flow issue? So that's what we're doing when we're trying to predict the future AR, AP, really across the board for these businesses. But the other place that we're really trying to bring our data to bear, one of the things that we recognize in small businesses is that they're waiting to really reconcile, do a lot of the sort of cost side of their books because it's time consuming, it's administrative. And so they'll wait like 30 to 60 days to really bring in all the cost information for their business. And what it means is that they're always missing a real-time view of their profitability. And so imagine you're a general contractor. You've got a lot of projects. You've got a lot of incoming bills. You haven't processed them yet. You don't know which bill is for which project and everything else. And so then 60 days later, you're like, oh, my gosh, the Han Residence project is not a profitable project, right? Whereas maybe yours is probably. Yeah, so it's those kind of insights that we're really trying to bring much earlier in the process. So again, a business owner can actually make a decision, not just be informed, sort of after the fact when it's too late to take action.
That is such a big unlock. Like just thinking about it is making me feel like my mental bandwidth just got released, right? Like when did you launch this feature?
This is an ongoing area that we're focused on.
Okay, awesome.
Yeah.
Mary Kay, you also have been working in the same arena, right? Like with the whole automation of AP/AR. When clients adopt that, what is the biggest unlock when AP/AR is fully automated? Is it around cash flow accuracy? Is it around faster collections, strategic decision making? Like, what are your conversations like?
Yeah, it is such a great focus area for us because some of our customers, and I totally agree with David, knowing what is coming in and being able to predict that, and I think all of us are working on solutions for that. Sometimes you're on the other side of the transactions and you're paying and you're saying, hey, I have to preserve some of my cash. So I'm going to be a bit of a slow payer to that contractor, and really knowing that. But I think the other one that we sometimes forget about, and I think it reflects on what David was saying about the waiting too long, like that matching and the reconciliation. I know, like, if you're a master cabinet maker or if you're a lawyer, I'm guessing you didn't get up in the morning and say, you know what, I'd really like to do some bank reconciliation. I'm pretty excited about it. I'm gonna make that happen. And I think
also labor savings, right?
And it's labor savings, so they don't have to do it, or somebody that they hire doesn't have to do it, which means they can put them to work for the rest of their business. But more and more, we're also seeing that labor availability is difficult for small businesses. And so hiring, even finding someone to hire to shorten that cycle is difficult. So we like to stand in for them.
Thanks for confirming that. I'm talking about that in my presentation later, so amazing. Okay. Ratinder, you see credit risk globally, I mean, PayPal's presence. What are the early signals you are seeing in SMB's health in this current macroeconomic situation? Any thoughts that you'd like to kind of share with us on that?
Yeah, I mean, from a pure data perspective, like we have a pretty comprehensive, what we call a recession readiness framework that's always on, and we're monitoring internal indicators, things that we think are leading indicators, both on the SMB and consumer side. I mean, one benefit PayPal has is like we're the largest two-sided network, so we can see kind of both sides of the house. And what I'd say is that the data is all really encouraging in terms of spend levels, delinquencies, losses. I mean, we're still at rough, 2-year lows when it comes to delinquency and losses on the credit side of the house. So no real concern there. However, like when we talk to SMBs, right, there's a lot of uncertainty. Right? There's a lot of uncertainty in costs and labor, and I think they're hedging a little bit because they're concerned what 2026 might bring, but as of this moment in time, no real concerns on the true health.
I'm 100% with you. And the funny thing is, 5 years ago, Asia, the exact same conversations, SMEs get squeezed on both ends. They can't dictate price, and they're cost takers. Yep. And in that scenario, when margins are wafer thin, you see an economic cycle. So that is exactly probably why it's very challenging to serve them as well. Let's think about from a network and partnership strategy. And I really like what you said earlier, David, around the network effect of what you can see and how that kind of impacts your offering, in the sense that you have a lot broader visibility and intelligence around that. So Intuit spans across accounting, payments, payroll, lending. All of these verticals have very strong incumbents, right? How much of a challenge is interoperability between those systems right now, and where do you foresee challenges like going forward on that?
Yeah, I mean, as we try to serve our customers, there's sort of two principles I think that are in mind for us. So, so the first is you mentioned a number of things that we build, and the reason we've chosen to build all those things natively is that we think that they work better together. We think that, especially in an AI world, when you have separate systems and data silos, a lot of the gains that we're going to get from AI, I think, get more difficult. And so I think our first principle is we've taken a very explicit strategy to sort of build natively. That said, we do have some really important partners out there. And as we think about our customers, we really try to figure out where are they actually running their business. And a lot of our customers actually run their business on QuickBooks. They do all the things that you just described. But some don't. And if you take, let's think about like an Amazon seller, for instance. And an Amazon seller is spending a lot of time in the Amazon Seller Central. And so in that particular case, we've partnered with Amazon to embed a lot of the tools that we have today, things like our capital product, things like our cash flow insights, directly into that surface, because we know in that case that is the gravity, that is where those customers are spending their time. So we ultimately are trying to solve the customer problem in the pane of glass where they're operating their business. In many cases that's us, but in cases where it's not, we want to make sure that we're there. We want to make sure it's easy. We want to make sure that we're integrated. Absolutely.
And Mary Kate, where do partnerships with card networks like MasterCard, Visa create differentiated value? Is it like acceptance, security, data? Like where do you see those sort of partnerships play a role?
Yeah, I think as we were talking about, and everybody's mentioned it, having more data as a provider to small businesses is an advantage. So having both sides of the network, or having their software-related data as well as their payments-related data, is really important. And it becomes really important to then know what to do with it. So when I think about those types of partnerships, in addition to the ones that David mentioned, we think about, we are also an issuer of credit on cards. We are also an acceptor of cards and a facilitator of those transactions. So if we're going to serve them well, we have to ensure that we're working with the rest of the financial services ecosystem, including the payment networks, to make sure that we are months and years ahead of the needs of our customers so that we can get it into our systems, so we can make it seamless for them, so it's very accessible, and it just works.
Yeah.
Instead of making sure that they understand what the new fraud release from all of the great work that we do across the ecosystem.
So we had to talk a lot about commercial cards and, what is kind of the reason why there's relatively slower transition, if I may say, to especially with SMBs, right? And we talked about financial awareness and all of that, but I think we need to address the elephant in the room first. We talked about access to credit, and maybe I should start with you, Rathinder. Funding SMBs has always been so tricky, right? And I know, I listed down 5 reasons, but smaller loans, higher rates, higher defaults. Banks don't always get it right. How far can embedded credit go without pushing the lever too much on risk? I think that's the one question that I get asked the most, that when you have lending outside of the banking purview, people like to kind of bring that risk concern.
Yeah, well, I think it goes back to having the right risk appetite framework, right? You have to step back and say, all right, what are we trying to drive here? We're trying to drive customer lifetime value, right? And so you've got to build guardrails around that framework. And so what that means is you might do a loan where you have zero margin, but that loan will drive, other value within your ecosystem. You're going to say yes to that, right? And so I think for us, it's a little bit easier because we have such a deep relationship with that SMB. There's so many different ancillary services, and we're trying to help them grow. So we're not a bank. We're not a sole lender, right? That isn't we'll never be the biggest lender in the world, right? That's not our purpose. Our purpose is to help SMBs, and that's the mission we're on. And so if you have the lifetime value framework, then it actually makes it pretty easy to say, what are we comfortable doing and not doing? And then with frankly, the availability of data today, you talk about open banking and how much less friction there is for an SMB now to get a loan and to get a pre-approved offer. I think we're in a much better place than we were, say, 2 or 3 years ago in terms of access to credit.
Point taken on de-risking with data, but let's talk about the current environment now, right? Like the AI adoption case, and I'd get beaten up if I don't discuss that topic on stage today. So let me start with you, David. Where do you think AI will have the biggest uplift for Intuit?
Yeah, look, the place we're already seeing it is, Ginger alluded to this actually in her opening comments. It's just, especially for small business, the burden of the administrative work, everything from AR to AP to payroll, all the things. This is, I think we talk about it a lot, but when you one-on-one with customers, you really realize how much of a time sink it is. And AI, we're seeing it already. It really has the capacity to really take a lot of this workload off. And so I don't even think it's a tomorrow thing. I think it's a today thing where we're really seeing the benefit, and it's just going to accelerate. And so as I think about, you talked about sort of confidence in general of the SMB cohort. Yes, there's a lot of things that are going on in the world, but at the same time, I hope that they see, and certainly the customers we talk to see, that they're going to be huge beneficiaries of this. They're recognizing that before, much larger firms had access to a lot of automation. Much larger firms had access to all these experts. Now they've got that themselves, or they're about to have that themselves. And so I think the time back so that they can go focus on growing their business, I think we all still underestimate how transformative AI is going to be for small business in particular.
For sure. I understand your bets on this. So I followed 2021 is when you came out and said that's one of our top priorities, to put in AI in workflows for our clients. But short on time, so Rathinder, where is the biggest lift for AI for PayPal?
Today, it is a lot of productivity, internal productivity, workflow, use cases, time to a new model, all of that. It's been incredible. I think in the collection space, we just released a voice agent, right? And consumers feel a lot more comfortable talking to a digital agent than they do a human being, which is super interesting. We could spend an hour on that. And then what I'd say, though, is like, what's going to be game changing is, you think about our ecosystem with 400 plus million consumers, 25, 30 million merchants. Like, how can AI be that Match.com to sort of bring consumers to our SMBs? I think that's where you're going to see the most value.
Yeah, and I think I'd be remiss not to mention your push on agentic commerce overall, right? Yeah. Democratizing AI for SMBs. Time for the nerd in the room to answer. What is the most exciting development that you're looking forward to?
Well, I need that hour that we were just talking about, because I get very excited. But not to repeat, and we have assistants and agents that are helping customers with everyday work, giving them time back, and we are protecting workflows. But one thing that I think I'll mention on top of that is AI is a tool for them. It's a tool for us to serve them, but it's also a tool for fraudsters and for people who want to maybe do some harm to them. And so we have some, we call it the AI paradox. There's all of this great stuff from AI, but then it also makes the bar higher for us to actually help them. I think 54% of our customers said that they use advanced AI capabilities to help fight fraud and manage credit risk and manage the risk of their business. But they also worry that 46% of them also worry that those are tools that the other side is using. So I think it's finding the good and using the good, but also helping them protect from the bad.
Yeah. We're in the right room for that conversation. I'm in MasterCard Acquired Recorded Future. That's like they're doubling down on that part of his result. Hope that was helpful for everyone in the room. And the three things that I'd highlight, just looking at these people that I'm going to carry with me, cash flow is king, not cash. Cash flow is king. Secondly, you can de-risk by using data. And thirdly, AI is the way to go. That's the only toolkit that you need right now for survival. Thank you so much, ladies and gentlemen. Thank you so much for being on the panel today.
Thank you.
Thank you.